Welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts out there. My name is Patrick Dunawilla. I'm the editor of the Chart Report, and I'll be your host. We've got Ian McMillan returning to the show. You might know him as the Chart Life on Twitter. Ian is a technical analyst and a portfolio manager over at Adaptiv. He actually had a big role in helping me launch the Chart Report back in 2018, so I'm looking forward to catching up with him and seeing what he has to say about recent price action. But before we talk to Ian, it's Friday, the markets are closed, so let's take a quick look at how this week played out. All right, so all four major indices closed in the green this week. We were actually down earlier in the week, but we reversed pretty hard on Thursday and ended on the highs. The NASDAQ led the way, gaining about 2.7%. The Dow lagged, but it still rose more than 1.5%. Now, taking a closer look at the S&P 500, it reversed right at the 200-day moving average. We gapped below it on Thursday, but buyers stepped in right where they had to. It acted as resistance numerous times last year, but we're starting to see it act as support now. So this is a pretty bullish change of character for the S&P 500. We'll see if it can continue to hold above it. Now, taking a closer look at sector performance, 9 of the 11 sectors closed higher this week. Materials led, gaining more than 4%. Meanwhile, defensive sectors like staples and utilities were the only sectors that closed lower, so fairly risk-on action at the sector level this week, with those defensive sectors lagging. Anyways, that's enough from me. Let's welcome Ian back onto the show. All right, Ian, how are you today? Thanks for joining us.
Yeah, absolutely. Thanks for having me back, Patrick.
Since we last spoke, you guys over at Adaptiv have launched an ETF, isn't that right?
We did launch an ETF, yep.
Could you just tell us a little bit more about the methodology?
Yeah, absolutely. So it is it's an actively managed ETF. It is when stocks are in an uptrend, which we categorize as being above a 200-day moving average for the S&P. This strategy will own 25 stocks. And when below the 200-day moving average, the strategy will move to cash and short-term T-bills. And the way those stocks are chosen is kind of based on basically a momentum ranking of a couple different inputs. I will defer to the prospectus if anyone wants to research that further. There's not a lot of detail in there, obviously on purpose.
That's awesome. I mean, you must have learned so much too in the process of putting it together, both, the methodology of it and the implementation of it, everything involved with that. But let's dive right into the broader market. What kind of are you watching? Here we are kind of range bound. What are you watching? What would get you bullish and kind of what would get you bearish?
I think, so S&P specifically, I think we're still talking about this 4180 level. I mean, you've got to get above these highs, this consolidation from last June. Yep, so 4180, we've got there. I think best case scenario, and we've lost this now, was bulls holding this 4080 to 4180 range. Obviously, that broke down last week, and we've drifted right into the 200-day.
Yeah, absolutely. And I know you do look at a lot of breadth indicators. I'm just wondering what exactly breadth metric you're watching right now and what you're kind of seeing on that.
So one of the big ones, bullish percent. Flipped back to those recently. It had kind of put in a thrust buy signal back in mid-January, back when all these thrusts were going off.
And the bullish percent, that's essentially the, remind me from my CMT exam, it's essentially the percentage of stocks within the S&P that are on a buy signal on a point and figure.
Yeah, and it's used, right? It's from Dorsey Wright, and it's on point and figure. So we had the move in X's. through January, and I think it started January 12th. And then as of February, I want to say February 23rd, it has flipped back to O's. So we kind of stalled out at midfield there. As my boss, Dave Sarling, who watches it pretty closely, likes to say. So Bulls definitely were driving down the field. Got to midfield, got to the opponent's 40-yard line, and then kind of ended up punting it away here in February.
And what do you think about rates here? Do you think they really are about to break out?
I think rates go higher.
Yeah.
I mean, Jay tells us every month that they're going to send rates higher, right? And then everyone wants to come out with their Substack article. Oh, have rates peaked? No, rates have not peaked. I mean, I think it's one of the things they've been the most upfront about, and consistently, and it doesn't seem like the market's really calling their bluff. I think at the end of the year, the markets try to kind of hold Jerome's feet to the fire, and I think that they finally have gotten the message that they're not gonna lower rates. Now, I don't know if rates continue at the same pace. I guess they could plateau here in like the 3.4 to 4.3 range. I know that's a big range, but if we see that for multiple months or multiple years, but I do not think rates are going lower.
Yeah, I mean, here we are, as we're speaking, we're over 4% for the first time in a few months. But technically, you look at a chart like the US 10-year, and I mean, there's just a classic retest over the last few months, held that 3.4 level. And here we are, making it go back at those former highs. And that's kind of a nice little healthy base there.
That pop in February is right off the 200-day. Not that I'm a huge moving average person, but from a long-term trend, I do think a 200-day moving average gives you a pretty good idea. But yeah, this 3.2, I mean, you go back years on this, 3.8. Right.
Yeah,
and we've all seen the broken down trend. You go over to the highs and I guess it's 1980. I see you've got pulled up, and we can connect all those. I mean, the rate of trend has been broken, and I think this is going to be even better for technicians. Dave and I have talked about this, but I think there's so many macro relationships about like what assets are supposed to do. And I think if we go into a 40-year rising rate environment, which I know sounds insane, that's how rate cycles work. But we're coming up on, probably the new rate cycle, you could argue, probably should have already started if we just hadn't artificially held rates low for the last decade. But it does seem like they are willing to finally kind of lift that cover. But just over the last 3 or 4 decades, that are going to get absolutely wiped out.
Relationships. Yeah, they've been kind of distorted.
No one knows. No one that's managing money, or very few. I can't say no one, but there are very few people today on the sell side or the buy side that have ever had to have an opinion on assets during a rising rate environment, right? Because the dollar should do certain things, or gold should do certain things, or all these things are supposed to happen. And I think so much of that gets thrown out the window. Obviously, you and I know what's never going to get thrown out the window. So I think it'll be a really tough. If economists don't already have it pretty bad, I don't think it's going to get any easier.
No, I think that's a really, really valid point, and definitely something to be aware of and keep in mind if we see rates continue higher. And it's funny, Ian, do you remember, maybe it was around this time last year when we were trying to break out of that, 30-40 year downtrend in the 10-year? Do you remember all the debate around, is that really how you draw the trend line?
Yeah.
And
Oh
all
my
that.
God.
Oh,
Yeah.
is it really a breakout? And here we are. It's
And it's
definitely a
cruised right
breakout.
through. I mean, yeah, it's, had a little bit of a pullback, last summer. And you could say, I mean, we even had a little bit of a correction, last summer, last July, into that broken trend line, and have just gone higher since. Now we've had our retest, but I mean, it's a strong uptrend.
Before we wrap it up, I just want to get your thoughts on crypto real quick. I know it's not something that you guys at Adaptiv are sitting there trading, but
We
I'm
will.
wondering.
I mean, if it wants to move into an actual trend, we've been on both sides of it in the past. But yeah, I mean, I think below 25,000, I'm not super interested in getting giddy. Any type of cryptos, if Bitcoin's going to sit here and.
I was just talking to someone about this yesterday, but like, how poetic is it that, this thing peaked with the laser eyes, the Tom Brady commercials, all that. And then where did it bottom, right? Like when Sam Bankman-Fried is behind bars and all that.
That's fascinating.
Yeah.
And I mean, Bears, right? I mean, Bears, below 19,000 kind of had their chance to do something. And especially you had plenty of backdrop from the headlines and weren't able to do anything. So yeah, maybe that's it for this cycle.
Yeah, it'll definitely be an interesting one to watch. Are you thinking about it as kind of a risk on, risk off indicator for the broader market?
Because, I think so.
It seems to me that there's not a scenario, and tell me what you think of this, but it doesn't seem like there's a scenario where, stocks go down and retest their lows and crypto doesn't as well, or the opposite, right? Where crypto, I mean, I guess the first scenario I described is probably a little more like, you know what I'm saying?
Yeah, I mean, I think if stocks are going to break out, that probably takes Bitcoin above 25,000 as well. I mean, does it have to happen? No. But that's kind of, I mean, it does, like, it gets thrown in the risk, like you said, it gets thrown in the risk on, risk off, just like junk bonds or, anything else that we've all categorized into these buckets. But as far as are people willing to put money in a high beta asset, I think that tells you a lot about where stocks will go.
Yeah. Well, for sure we'll be keeping an eye on it, and we'll definitely be talking about this thing. But Ian, we got to wrap it up. I just want to say, have a great weekend.
You too.
Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week. Thanks.